The dollar versus Canada started the week near the lowest level going back to mid-December and rallied off of that level and above the 100-hour moving average. However, resistance did hold against the key 200-hour moving average, and since then the price has rotated to the downside. Where do we stand now from a technical perspective? I'll go through that in this video, so let's get started. We're moving toward the end of the trading week, and it's always good to recap what happened during the week. And recall from last Friday, the price did move to the lowest level going back to mid-December, down at 141.50 on Monday's trade. We tried to move down toward that level, but couldn't get to it, and we started a rotation back to the upside. On Tuesday, the price moved up to test the 100-hour moving average. It did it again here in the early session on Wednesday. And then finally broke above that level based against the 100-hour moving average, moved up toward the 200-hour moving average, where the price tried to ping pong in between the 100 and 200-hour moving average. In trading yesterday, we did ultimately fall back below that 100-hour moving average after trading above and below it through this period right through here, closing lower on the day, but still above the lows from the week. In trading here today, we rotated back to the upside, and we spent most of the European morning session, a number of different hourly bars, banging against that 100-hour moving average, not once, not twice, not 3 or 4 or 5. There's about 5 different hourly bars that came up to that 100-hour moving average. Retail sales came out, forced price down, but now we're seeing a rotation back to the upside, back toward that 100-hour moving average. So what next? Well, clearly this week from a technical perspective, 2 things happened on the top side. The 200-hour moving average held resistance, then the 100-hour moving average held resistance. We also held support against the 100-hour moving average and also used that level as resistance through here. So these moving averages are doing the job for us. So if the buyers are to take more control, what do we have to do? We have to get back above the 100-hour moving average, get back above the 200-hour moving average at 141.968 and 142.208 respectively. If we're able to do that, then the bias shifts more to the upside. The sellers probably get have a little cause for pause. It doesn't take the market out of the full bearish bias here that we've seen since this tariff news spike right here, but it gets the price off of its backside and gives the buyers the go ahead to try to push toward this key level up through here, which was a floor level before breaking and moving to the downside. So that would be the next key target on the top side, and then we start to rotate, look for higher levels in that direction. Alternatively, if this 100-hour moving average cannot be broken, then the sellers remain in control, and we look for ultimately a break back below the 141.50 level and more downside momentum as the market trades to new year lows for the dollar versus Canada. So there you have it. A look at my technical look for the dollar versus Canada as we head toward the end of the week and into the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.